Welcome back to the channel, Crypto Trend Trader, with a quick update on Bitcoin. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. This is Bitcoin Daily. Alright, so basically, if you saw the last video, we got the exact move we talked about. We got the move back up to the top of the orange channel right here. The descending channel that we're in right here, got to move back up to the top of that channel, which also corresponded with this yellow channel we started forming's heart line. All right, and that's exactly where we said we'd sell off at in this moving average cluster, the 21. We top out at the top of the channel, sell off, come down to the exact bottom of the yellow channel. Okay, that's where we're at right now, which corresponds with the heart line also of the orange channel. So that's exactly what I said. We were going to get pinched in between these two areas right here, and it was going to start forming, basically like a descending, tightening wedge. Like the wedge is getting smaller as it gets pinched in here and continues to move to the downside, which is why we're overall short, because we're in a downtrend. Once you get these moving averages crossing over here, anyone that knows about technical analysis or, charts, or basically like just has a basic understanding of basically what's happening and trending moves, knows once your two short period moving averages cross over, you're confirming in a downtrend. So after that happened right here, and we got the retest back up, which I once again said, and we did the exact move, we attempted to cross them back over, and then we got the sell back off and failed. That was the fake out outside of the channel. And then we immediately dump back inside of it, revalidating our orange channel, which is the more reliable of the two patterns, which is why I would expect, more likely than not, that what would happen is we would essentially like consolidate right here, try to push back up, fail, and then sell back off to the bottom of this channel. And then if you look at where that's going to correspond with, that's right in line with our moving averages. So we have the 200 exponential on the daily, we have the 200 simple on the daily, and then we have obviously 377528, but that all lines up with the fib right here at the 236. So if we just dump down outside of this channel and just break out of it, one of these areas is the top area I would expect for us, at least on like a daily time frame, to stop at. So it could be any one of these different levels. Now, depending on what happens in the meantime, like short term though, we could get a lot of action, because essentially what happened now is we came back down here. We broke down from the 377 and just retested the 528. Okay, now we're finding temporary support on the 528. But if we look at the indicator oscillator here, we got the sell signal right before that dump happened, but now we still have a bunch of room we can move to the downside. But this is exactly what I was saying in the video about we're going to wait until divergence develops, and then it's about to dump off. So we get this move up here, okay, on the blue, it comes up high, almost into, like the top level, above 80. All right, you see how high it comes up to, 77. And then it comes back down, and when it comes back up the second time, it gets across, and then it crosses back over. A lot of times it will bounce right here and not get the cross at all, but this is the same thing. It'll get the cross, then it'll recross back over, and then immediately, look, we put in a lower high on the oscillator, 74 versus 77, and now look at the peaks. This peak was way down here at 9,200, and this peak was 9,279. So you can see like the divergence develops because you're way down here and you get this peak on the oscillator, and then it comes up even higher. Price action is way higher up. But now, well, it's tough to tell now because this is going to have gotten dragged down too by that big move. But essentially you could see the divergence built, and then, now we got the divergence playing out. Now again, what I would expect to happen is you start testing these areas too many times and they stop holding, because you're going to eat through these buy orders that are holding the price up. But essentially what's happening now is, depending on where we print at, we're now basically putting the trend in jeopardy. And what everybody was calling this whole time as a giant ascending triangle looking for the break to the upside, saying this was like a flat top and that we were going to go to the upside, is now starting to look more realistically like a descending triangle, because now we're coming down here and we keep putting in like more of a flat bottom. And this is why this indicator right here is so great, because it takes the guesswork out of it. Because now when you look at it from a distance like this on a shorter time frame, it basically draws out the pattern for you. And you can see now, because of like where it's putting in your flat bottoms and everything, you can see key supports when you're zoomed out on it. You can see key resistances when you're zoomed out on it. And then once you appreciate that more, when you're zoomed in on these levels and you see a couple of these dots, it makes a little more sense. You know, when you see a move like this where you have a strong resistance, you get a move above it and then it fails and starts selling back off. That's essentially like a stop hunt right there. It's like a slingshot move where you're coming up to test a key resistance. This is essentially a liquidity grab. Okay, you know there's going to be a bunch of buy orders at the 200 moving average, like once it gets above a certain area. So you move the price up to that area and then you sell into that. So you get basically like a fake breakout. Everybody gets excited thinking we're about to bust up and keep going, and then you just sell at it like a key level right here and just use that liquidity to now slingshot the move to the downside. Because otherwise the price just creeping back up here, and now here in 1 or 2 candles we get right back down to where it was at this whole time. But look how many candles it took to get there. It took multiple days for the price to just creep back up there, and then it took literally 1 candle and then sells back off. And now here this is getting bought up so far, which is good, but I don't expect anything to change. I think this is essentially just that reaction off of, you know, that's our 89 moving average, the bottom of the channel and the heart line from the other one. So, you know, if we get this move back up here now, what would you expect it to do? Well, you expect it to basically just move back up and just put in another lower high. So at some point in time, are we going to come back up and retest 9,200? Yeah, I mean, I would say there's a high likelihood with how many times we've interacted with it. But, you know, essentially it's just playing out as we've seen. You know, we confirmed a downtrend on the oscillator indicator. That's the most important thing. We confirmed the uptrend way back here, April, beginning of April. We got the cross on the 8 and the 21. We almost got the cross back down here, almost got the cross back down through this area. But again, that's weakness at the top of a trend, which typically means it's time to retrace. We got the confirmed cross right here, and then bam, we're selling back off. So as long as we're not closing above the 21 moving average, you know, we're going to continue getting pushed down by it. So now I would expect basically the 8-period moving average is going to act as resistance to us now. So our longer period moving averages will still act as support, but the ones that we're under now, all of our shorter period moving averages, as we sell back off, now we're under the 8, we're under the 21, we're under the 55 and the 50 exponential and simple. So now here we're coming down here, we're testing the 89. If we can't find support on the 89, we come back down, test the next one, and then if we get a move back up for off that 200, I would expect the 89 to act as resistance. And that's going to correspond. Typically these longer period moving averages are going to correspond with like horizontal supports or like diagonal trend lines. Like that's why it's so beautiful when you can get like multiple levels of confluence. So but here we are testing another key resistance, you know, key support rather, trying to basically, you know, hold this trend back up here. But I mean, it's becoming like very evident that you know, at some point in time in the near future we're going to be correcting this entire wave. And people were talking about essentially like Elliott wave, and I still haven't seen a good way to draw this Elliott wave other than this being 5 completed waves, and now we're basically like going into our correction. But this is the top, so regardless how you're going to say it, if you're going to call this wave 1, we're at the top and we need to correct. If you're going to call this wave like 1, I mean, call it like 1 through here, like 2 in there, I guess, or somewhere in this jumble you're going to get a 1, 2, and then this is going to be a 3 and we're getting the 4. That means we're going to get a correction and then just continue up for a 5. So once again, that calls for a correction. And then if you're saying basically this whole thing is a 1 and we topped out, we're coming down for a 2. So once again, it's calling for a correction. So all three ways that I can see this being an Elliott wave lead to at least a short-term correction, and then it's the price action that follows that will let us know, like confirmed, which wave basically we are in. And then looking at the oscillator indicators on shorter time frames, I mean, that was, we got that knife stab down here perfectly, and then got like the sell signal. And if you've actually watched like some of the previous videos on explaining this, that's a divergence on the indicator that's built into it, which is awesome. When you see the knife stab down here like that, and then you get the sell, it's a divergence on the indicator, because it's telling you when the knife's at the bottom, you're looking for a buy, you're looking for a reversal of the trend, or at least exhaustion. And then you get a sell all of a sudden when you're looking for a buy. That doesn't make any sense. In the same way that like right here, this was a beautiful one too. This is one of the best divergence signals we got, and this was awesome for the absolute top. You get the knife come all the way up to the top right here, bright green line all the way at the top, and then you get the buy signal? Wait a minute. We should be looking for a sell. The price should be topping out here. The knife's all the way at the top. We should be looking for a sell, and then we get the buy. That's a divergence in the indicator and tells you the trend has topped out. And that's why this indicator is absolutely beautiful. And when you get something like that, this is the TJD Jewel Thief, if you're curious. When you get a signal like that on a longer time frame, this is a 4 hour, so it's definitely tradable. But if you get that on like a daily or a weekly, or like, I mean, it's pretty much impossible on a monthly, but you know, that's gonna mean amazing price action to follow. So, but it could take time to play out depending on the, you know, time frame that's on. So, but yeah, there we have it. We're basically gonna look down here now for divergence for a like relief rally. So essentially, we had the knife come down here, you know, to the support level in purple, and essentially like maxed out, got the bounce, found support, moved back up, and now it's coming back down. So essentially what we're looking for is that divergence to play out. We get a lower low on this, a lower candle close on this than this previous low of 89.90. So if we close below 9,000, okay, but the knife comes down here and doesn't put in a lower low, that's a divergence in the indicator. Now if we just continue down here and put in a lower low, but we don't get a lower low on price action, again, that's a divergence, because we would have a lower low on the indicator but a higher low on the price action. And then finally, you know, obviously what could happen is both of them put in a lower low, and then that's just convergence between price action and the indicator, in which case, you know, eventually you would expect there to be a bounce, but, you know, no playable divergence would develop. So, and if you're not familiar with divergence, I have a video explaining how that works and how to play it as well. So I definitely encourage you to check that out. So, but there we have it for now. I just wanted to do a little update on that. We are getting that support like we were talking about. We'll see how it all works out. We'll see how it closes. I mean, essentially when a move like that happens immediately, after like a 4 hour close or after a daily close, and then it gets bought up like that, what usually happens over the next 3 hour period while this candle plays out is, what usually happens is this starts to just bleed out. You might even come back up and retest these moving averages, and then it'll just start to bleed back out, and you'll get continuation. But we'll see what traditional markets do. They've obviously been leading, like, you know, everything. American stock market is basically like, you know, a couple leading companies are basically like propping everything up at this point in time. So but there you have it, guys. A little bit of divergence, a little bit of TA, a little bit of that Elliott wave, just quick discussion. Make sure you check out the free indicators if you have any questions about them. I probably will be publishing at some point in time too, a couple new ones that I've developed for the community as well. So Crypto Trend Trader, and I'm out of here.